What's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a licensed financial advisor. Please trade at your own risk. With that being said, I really do appreciate you taking time out of your day to watch my video. And if you are already subscribed to my channel, thank you for your support. Y'all truly do make my days better. If you're not subscribed yet, hopefully we can earn your subscription at the end of this video. But in this video, we're going to backtest the optimal trade entry, my approach to it. Now, I understand that ICT's optimal trade entry is pretty much based off the 5-minute time frame. And in his optimal trade entry primer video, as well as a pattern recognition series, he demonstrates it on 5-minute time frames. Now, I like to use it on the 1-minute time frame, and the reason why is because I find a little bit more entries on the same pair. With the optimal trade entry, ICT demonstrates multiple pairs, multiple assets with the optimal trade entry on the 5-minute. Now, from what I've kind of back tested and learned is that on the 5-minute, it doesn't happen every day on the same asset. It does on the 1-minute though. If you trade it on the 5-minute, you're going to have to trade multiple assets to be able to get a trade every single day. ICT doesn't say you should trade every day, but it's totally up to you as your own trader. Now, what is the optimal trade entry? The optimal trade entry, or the OTE pattern, is based on buying or selling retracements. So as the market makes an impulse move higher or lower, that impulse price move has to be incorporating a break in market structure. Then you want to buy or sell the retracement to capture the next leg higher or lower. Now, what makes a trade entry optimal is the fact that it will occur at a key time of day. It's a specific time window that begins at 8:30 a.m. and ends at 11 a.m. New York time. In this time window is when the pattern often forms. However, if you're trading the 5-minute, if you're doing the 5-minute OT, like in his pattern recognition series, it can also form before 8:30, but specifically though, you want to take entry within this time window, 8:30 to 11. ICT does say to focus on a rules-based approach and stick to it, so we won't be confused when things go wrong. It'll simply just be a losing trade. You want to know what you're doing, what time of day you're doing it, what you're looking for, longs or shorts, and if it doesn't fit the criteria, you do not do anything. You simply just let it go. Now, for the optimal trade entry, we base our framework around Fibonacci. And Fibonacci is not magic, it's the target of liquidity that is magic. The Fibonacci just helps us frame an underlying context. It just gives us a framework pretty much. Now, that being said, we're going to go ahead and dive into it. If you guys are liking the video so far, please drop a like for the YouTube algorithm. It really does help out the channel a lot, and I really do appreciate it from the bottom of my heart. If you guys have any comments so far or any concerns, please drop them in the comments below. If you guys want to see anything in the future, let me know as well. And again, if you're not subscribed, hopefully we can earn your subscription at the end of the video. Now, we're going to test this on a random pair, since it's basically focused on the New York Times session, 8:30 to 11. I believe it works best on USD pairs. So I have them all here. We're going to do a random spin. See what we got. USD CAD, perfect. Let's go ahead and jump over to our charts. Let's bring up USD CAD. Now, Forex.com, I really like Forex.com, so we're going to bring it up right here. Now, I have the notes right here. I think I also have it in my clipboard too. But what we're going to do is we're going to scrunch up the charts really crazy. We're going to do the replay tool as well. We go ahead and make it full screen. We're going to scrunch up the charts so we have no idea what is going on at all. We're going to go back twice to the crowns. I tried it a third time a little while ago while I was back testing, and I've learned it only lets you go back twice crowns. It don't let you go back to a third crown. So here we go. 2 crowns. Now, right here, I'm gonna go ahead and add the text. So these are the steps to the entry. These are a little bit of rules that I kind of created so far. And along the video, if I feel like another rule is presenting itself or I feel like a rule is necessary, I will add it. These are going to be the wins, losses, totals, trades taken, wins in a row, losses in a row, and total percent gain. Throughout this whole back test, we're going to use a 1% risk. These are going to be the take profits hit. Now, we're also going to keep track like how much percent you would be up if you like did this, did that, or whatever. We're just going to see what gets hit the most as well. So that way we can know what we should hold for with this specific setup. Now, this setup is based off the 1 minute time frame. This is a 1 minute time frame. And this is my approach to it. Now, again, this is what works for me. I don't know what's going to work for you. Some people lose money. You may lose money. Again, I'm not a financial advisor. Trade at your own risk. So we're going to go ahead and skip forward. You guys hear the blender in the background. My girlfriend's making me a smoothie, some raspberries, banana, and all the good stuff. Got some fibers in it. I need like 25 more grams of fiber for the day. I'm at like 15 grams of fiber. And then pretty sure I'm at a decent amount of protein. I ate me a chicken club sandwich with extra chicken. I had me 5 eggs, 2 wholes, 3 whites. Whatever you guys ate today, let me know in the comments below. Anyways, so step 1 is time. You want to mark your 8:30 to 11 New York time session. Now, if your time isn't set to New York, you can totally do it right down here. The UTC don't matter. Just make sure that the New York is set. Right? It'll have the check mark right next to it. So we're gonna do our 8:30 right here to 11. Now, why 8:30? Why? Because news comes out at 8:30. Why 11? Is because the New York lunch for the New York stock exchange traders, or all those people that work, that trade and all that on the New York Stock Exchange, all that stuff. They take lunch from 12 to 1, which is 12 to 13 on charts. So a lot of them take an early lunch. They'll go around 11. So around after 11 is volatility begins to die out, kind of slow down. You know what I mean? So that's why. And that's what ICT says himself too. Now, with this optimal trade entry, I'm also going to be placing the Fibonacci off the wicks. And ICT also places it off the wicks in his videos as well. Not the OTE primer, however, the pattern recognition series, he did place it off the wicks. And the pattern recognition series is the most recent updated series of the optimal trade entry. And from my back testing, the wicks give you better opportunity versus the bodies. So that's just my experience. Of course, again, what works for me may not work for you, but hopefully this does. Now, step 2 is patience. Allow 8:30 news to hit, then allow price to create a higher low. Then we want to see price break that higher low. We want to try to get into the second retracement after 8:30, not the first. Why? Because at 8:30, news will hit, take out liquidity, shoot up the other way, and then it'll retrace. And those traders catching that retracement, that's the 2022 model traders. And ICT says that that specific retracement creates that intermediate term high or intermediate term low, specifically because it rebalances an imbalance. Anytime an imbalance is rebalanced, it creates an intermediate term high or an intermediate term low. Now, what is that? That specific intermediate term high or low is a swing that gets pretty much held, like it holds price. It shouldn't get ran through. In other words, price should not run through this intermediate term high or low. And if price does, then on the next retracement, the very next retracement, if it runs through that intermediate term high or low, then the idea is flawed. So We want to try to get in on the second retracement. That price retraces back towards that intermediate term high or low, anticipating that price will hold there and continue the opposite direction. And again, if it runs it out, then our dia is flawed. So in this situation, 8:30 news right here, took out liquidity. Let's see if it'll expand and take this high out right here. And we'll see what happens. Now, if it does break this low right here, we'll just attach our fibs there. Because at the point, boom, okay, so it took out that high. Now we want to see it retrace back down. Once it retraces back down, there's the retracement into the fair value gap. These are the 2022 model traders entering right here. They're going to take this out. This is going to create that intermediate term low. There's that intermediate term low. There's that break. Now at this very point, once it takes out this high, then you're going to go back through and you're going to attach your Fibonacci. Now, I'm going to refer to the 1 level as point A and the 0 level as point B. You're going to attach your point A on the very most current recent swing low, 3 candle swing low pattern. You're going to attach your point B onto the very most recent current 3 candle swing high pattern. Now, what is that? You notice right here, this black candle, and this green candle. Notice how this green candle didn't have a wick. This green candle didn't have a wick. This black candle's wick was lower than this black candle's wick. So this black candle's wick was higher than this one. And if this green candle, since it didn't have a wick, you would consider it to be higher than this one too. So this creates a swing low. Vice versa, see how this green candle right here had this wick that was lower than this one's wick. And then this black candle was lower than this one's wick. This is a swing high. Okay, so at this very moment, we want to wait for a swing high, which creates right here with these 3 candles. Okay, why? Because this green candle's wick is lower than this green candle's, and this green candle's wick is lower than this green candle's. So we're going to attach our point A here. And let me delete all these really quick. Delete this, and delete this. Point A here to point B here. Okay, now we're going to extend this out right there. Now, step 4, structure, limit order, and stop loss. From here, we will set our limit order at the 0.59 fib level. Okay, now we're going to limit buy here. Okay, we're going to look for a buy. Our stop loss is going to be set at the, where is it at? Our stop loss will go to the 1 fib level. Boom. We will wait to see if we are triggered in. Now, also watch to see if any new 3 candle swing highs or lows get created. And if they do, we will just simply drag our fibs to the new points, okay? We want to stay on the most current points. All right, let's see what happens. All right, so we're going to drag it up. Once the new 3 candle swing high gets created, let's see. No, there's a 3 candle low that got created right here. So we're going to drag it up right here to this 3 candle low right here. Okay, and we're going to wait for a high. There's the high right there. So we're going to drag this up to the new high. Boom. Now we're going to set our order. 1 position right here, stop loss right here. And we'll see what happens. There's a new high. There's a new high up there. Drag it up. No new lows, so we're going to keep the same low. Stop loss there. Let's see what happens. There's a new swing low right there. We're going to drag it up. Now right here, we should probably wait until price actually breaks this high to move it up. So actually, we're just going to leave it down here. Entry will stay right here in case it comes down, okay? That could be a new rule. That could be a new rule. See what happens. Okay, so it just took out that high right there. There's a swing low. Now we're gonna drag it up to the most current swing low, which is this one, to the swing high, which is this one. Now we have a rule here. After the point B of Fib's 3-candle swing high or low gets created, in this case, the swing high gets created here with this green candle. That third candle must not have touched our 0.59 level or deeper. So it has not touched, so everything is A-okay, okay? So we're gonna set our limit buy right there. Stop loss will go right here. We'll see what happens. Nope, it continued higher. So at this point, we're gonna wait for swing high to create. It created. If we drag our point B right here, the new one right there, it breaks the rule. So now we wouldn't have a trade entry. Now, I've been testing this to see if we can just stay within this 1 hour, try to catch a trade within this 1 hour, and then we'll be good. At this point, it's already kind of continued a lot here. It could probably turn around here. We'll see what happens. So it turned around, swing low created. Once that swing low got created, where's the swing high? Right here to swing low. Now for the video's sake, I'm gonna take the entry. If price comes up and taps here, I'm gonna sell. Now we could sell here. There's two options. Or we could take a buy right here. Why would we take a buy here? Well, if we look at our second rule, if our first entry gets ran out, which this would be our first one, from here to here, that broke our rule, right? It would have got ran out. It would have taken the swing out, right? If our first entry gets ran out, we will consider it a liquidity run. That was a run on liquidity. And we will anticipate price to continue back up and take this high out. So you could be looking for a buy here, or you could be looking for a sell, anticipating that it just broke here, retrace, and continue down. Okay, so this is totally how you want to be as a trader. This is how we all differ. This is how we all may look at it differently. But for the video's sake, I'm just going to follow this structure here. Did make another low right here. I'm going to drag it. Boom. I'm going to move my entry up a little bit. Keep the point A the same. See what happens. There we're in the trade. We're in there. And we got stopped out. Okay. Now, this is where, again, we could have considered it a liquidity grab and we could have won. Okay. Now this could become a real rule. After the liquidity grab, right here, took it out, could have dragged it down one more time, enter, and it could have went up. But if it would have taken this low out right here, then we could have possibly started looking for sells. Maybe that could be a new rule. Hot shot, whenever you rewatch this video, notate that for future back testing so that way we can see it. That's a great rule to add. Now for this one, we're just going to say that it's a minus 1% loss. Minus 1%. Losses in a row, one loss. Total trades taken, one loss. Okay. So now we're going to go to the next one. All right, so going to the next one. It's going to take a little while. A little bit of this. At this point, y'all can kind of fast forward maybe. But yeah, so we're down 1%, and that's totally okay. Could have been up at the same time, and that's totally okay. Like I said, that could be added to the rules. So we'll just see what happens. But we want to get to 8:30 the next day. Man, this is taking a while, huh? Maybe I could go to the 5 minute and just fast forward. It'll be a lot quicker, honestly. Go to the 5 minute. Yeah, see, we're already almost there. I'm gonna start doing that, maybe even the 15 minute. Okay, so let's go ahead and do our 8:30 right here. Boom. Okay. Now we're gonna drop back to 1 minute. All right, so we got our 8:30 marked up. Let's see what happens. All right, 8:30. Here it is. Nothing really happened. There wasn't much news. If you notice, the candle is pretty weak. It's like an indecisive, excuse me, an indecisive candle. So at this point, if price takes out this high here, retraces, and then takes out that high, then we'll look to get on that second retracement, okay? Instead, it created a low here. If it breaks this low right here, and then we will look to get in on that second retracement. Now, let me know if you guys think maybe it'd be better to get in on this first impulse, the retracement, and then look for an entry, or what you may think. And at this point as well, we can also look to trade like the inner swings, like right here from this one to this could be a good entry. It could tap right here and then continue down. It could be, but we're looking for this to get broken, and then we'll look for that second one. Yeah, see, it could have tapped it in and continued down. Oh, it would have got straight up brutalized. All right, so it wouldn't have been a good idea. All right, anyways, but it didn't even tap in anyway, so it don't even matter. Anyways, this is the impulse right here. Took out all this retracement. Maybe we can even look to get in on this one, but we want to see, because these would have been the 2022 traders entering here, and they would have got obliterated. That would have been me back in like January. This was a terrible day, honestly. Came back, and then it took this one out. First retracement, took that one out. Now right here, we could look to try to get in on that second retracement. So first retracement here, took it out. Now we could try to see to get in on the second one. This would be the point A to point B. At this point in the video, I really hope that you caught on to like how I attach the fibs and whatnot, so I don't have to explain it every single time. And we'll just try to make this not too long of a video. Oops, oops, oops. Oh no. Would have went right here. The point B, which formed right there. Or point A, I mean. Took out. Now this point. Need to go here. Here. Data relatives. Yeah, this one was ugly. So we're just gonna go to the next day. Let's go to the 15 minutes so we can kind of go a little more quick. We'll go to 8:30, which is right here, next day. So we didn't take a trade there, okay? And that's okay. Price was just really ugly on that day, and it's totally okay. All right, so we're right about there. All right, I'm gonna drop back to the 1 minute. It's down here. All right, right about there. Okay, so 8:30. All right, 8:30 has that news. Let's see if it retraces up, breaks that low. Well, instead it breaks that high. Look at it, and this is why I don't like that 2022 model. I would have got smashed right there. It just retraced into the fair value gap here. Maybe this would have been the 2022 model. Well, here's the run on liquidity. And then this is the market structure shift. Oh yeah, this is the 2022 model. So if it breaks here, this is an intermediate term low. We want to look for the retracement into that. Boom. Okay. All right. Well, hopefully it continues higher. No. Yeah, see, 2022 model got obliterated. Sucks. I'm telling you, I don't like that 2022 model. It sucks. All right, so it took out here. Let's see a retrace. Take that out, then we'll look to get in on the second retracement. Here's retracement. Taking it out. Okay, now we're gonna look to get in on the second one. Swing low created. Here's point A, point B. Set our limit sell. Stop losses here. Excuse me. First take profit will be here. Created a new swing low right here. Not yet though, not yet actually. There, created it there. Now that's already touched our 0.59 level, so it invalidated itself, so we wouldn't have taken the trade. And it continued. And it actually continued. Damn, I wish we would have taken the trade. All right, so maybe we can make that rule like their candle must not have closed over. Over. Wicking it is okay. We just place a market order. Do we want to place a market order there? Because if we place a market order like right here, then we will place a limit order there. Back there in anticipation that it'll tap once more. Anticipation that it'll tap once more. Okay, cool. All right, new rule. Cool. So that day could have been a win. At the same time, it wouldn't have because it didn't come back and tap once more. But I like that as a rule. All right here. 30 is right here. All right, I'm gonna drop to 1 minute. All right, so 8:30 news came out. Take out liquidity. Let's see if it comes down here. Market structure shifts or something. So that would be the market structure shift point. It shifted there, then it refilled the imbalance, took off from there, then we can look to get in on the second one. Okay, that's the shift. There's no fair value gap. Instead, it took off right here. It filled in this imbalance, so technically that's an intermediate term low. Now I want to see a high get created. There's the high. Where's the most recent swing low point? It's going to be right here to here. I'm going to set my buy limit right here. Stop loss right here. New high point right here. Entry right here, same stop loss. See what happens. New high point right here. Entry right here, same stop loss. Let's see what happens. Took out that high right there. Let's move up our stop loss, or not our stop loss, but our low, point A. See if it creates point B. There's a point B right there. Sorry about my dryer in the background. Now at this point, I'm going to set our buy right here. Stop loss right here. See what happens. Pull it higher. Let's see if it creates a high. There's the high right there. We extend this up right there. The low is right there. All right, we're gonna set a limit order right here. All right. If it taps it one more time, if it taps our level, we're in, okay? All right, we're in. This is take profit one right here, okay? Okay, take profit one hit. This is where we will claim 50% of our position. So let's say that we risked 1%. We're gonna claim 0.5% right here. So we're gonna say that we're gonna consider this a win because take profit one was hit and we are claiming profit. So this is a win. Total trades taken is 2. We'll say one win in a row, minus 0.5 so far. Now let's see what gets hit, okay? At this point, we can hold for take profit 2, which is 0.25, take profit 3 here, take profit 4 here, or take profit, which is the last one. I did not mean to move it, which is the last one, which is up here. We'll see what gets hit, okay? All of them get hit, except for take profit 2. It comes all the way back down. Even -1 didn't get hit, technically. So we could say that it hit for this is 1, this is 2, and take profit 3 got hit. So we could say that it hit to take profit 3. And let's say that we held till take profit 3, right? So AL got hit one time with this trade. And let's say that we didn't claim partials at any other spot and we just claimed at the take profit 3. So this would be about a 1 to 3 R. So 0.5 left on the table. That would be a 1.5%, right? At a 1 to 1, it was 0.5. Yeah. So that'd be 1.5% win. So we're going to add 1.5% to this. So we would be up 1% total. Plus 1. Okay. All right, cool. So that was that day. Go to the next day. And 30 right here. Okay, we'll drop to the 1 minute now. See what'll happen. Okay, right here. All right, so let's see. So it's about that high there. So created this low here, ran out this liquidity here. There's a market structure shift right here with this candle shifting structure. And there's no fair value gap, but it retraces into this fair value gap here that got rebalanced. This could have been the intermediate term low. If we would have went from this high low to this high, obviously we would have been winners, but we didn't go for that one. Let's see that we went for this one, right? High, create a new high here to new low here. Close below that, so this won't be an entry, but instead, if we drug it to this one, we could set a limit order right here. So if we set a limit buy here, stop loss here, let's see what happens. We got obliterated, so we're gonna take a loss here, -1. We got 2 losses, 0%, 1 loss in a row. Okay. Now it'd been cool if we paid attention right here. Maybe we should start paying attention to the intermediate term low that gets, created. Because if you notice here, there was this imbalance that got rebalanced here, created this intermediate term high. It got traded through. So this trade idea was flawed. So it should have held right here, continued down. Instead, it took it out. So right here, you can kind of anticipate that since this intermediate term low filled this imbalance here, we can anticipate that it'll hold right here. And that's just applying logic. So if we would have applied logic, we wouldn't have been a loser. But I'm a loser in this case, okay? Bummer, but reality of trading, I just missed something. I missed a key detail, and hopefully you don't miss those key details whenever you trade, right? Let me take a sip of my smoothie while we get to the next day. There it is right here. Hold on a minute. All right, 8:30. Take out liquidity. Market structure shift. Build an imbalance right here, right? No, there's no imbalance right there with this. There's an imbalance right here. There's no imbalances. Maybe we can just look for the intermediate term lows or intermediate term highs. Like right here. Here's an intermediate term high that got created. Why? Because it rebalanced an imbalance. So at this point, if it creates a low, let's run a fib off of it. Let's see if we're profitable. Set our short position here, stop loss here. Let's see what happens. We're in there. Take profit 1 hit, so we'll claim 0.5% of our position. So there's a win. 2 wins. Taking 4 trades. 1 win in a row, 0.5%. 1-to-1 hit 2 times. Now let's hold for 1 to 3 right here. Now also what you can do Some traders would move their stop loss to break even. If you did, you would have got stopped out. What I like to do is I like to move my stop loss halfway between entry and original stop loss. So that way, if price takes us out right here, it'd be minus 0.25%. So regardless, we'd be a plus 0.25% winner with this whole trade. So we still come out profitable. All right, so minus 0.25%, almost hit right here. It did hit it 1 to 2, but barely, but we target this level. So minus 0.25, so 25%. All right, let's go to the next day. I'm gonna take another drink of my smoothie. Oh, chill out. 30 is right here. Okay, we're almost there. So I'm gonna drop to the 1 minute. All right, we're gonna pay attention to the intermediate term lows now. We just adapted to the freaking strategy. Okay, so just filled an imbalance, rebalance, and imbalance. If it breaks this low here, that's an intermediate term high. Look for sells. Take it out there. At this point, we'll set a sell limit order because this is technically an intermediate term high because it filled this rebalance, this imbalance here. So if price retaps this level, we're in there, okay? Okay, we're in. Okay, we took a loss. So our idea here was flawed. This intermediate term high got ran through. You notice it created an intermediate term low here as well because it rebalanced right here, rebalanced this imbalance, took it out. If we would have took a bib from this low to this high, we would have got triggered in on our second tap and we would have won. So maybe we can also add if two intermediate terms like a high and low are both on the table, maybe we could prioritize the most recent created one and target the opposite one. But we took a loss here, so it's minus. It's a loss. We took 5 trades. 1 loss in a row, 3 losses total. So we're down 0.75. 75%. Right? Let's go to the next day. Take another drink of my smoothie. There he is, right? Drop to 1 minute. All right, let's see what happens. All right, so just rebalance and imbalance right now. If it takes out this high here, that's an intermediate term low. All right, it just took out this low. Here's an imbalance right here. Just took out that high. There's an imbalance. It just rebalanced. If it takes out that high, all right, I just took out that high. I'm gonna apply fibs once it creates a swing high. Nope, I can't apply fibs now. Well, we apply from here to here, and we set a buy limit right here. We'll consider this the overall intermediate term low. We'd be getting in on the intermediate term low here, honestly. Let's see what happens. Let's just see what happens. We're in there. We're in there. Oh, we got getting slaughtered, bro. Now, if you notice though, so the rebalance right here, right? This could have been an intermediate term low, but instead it rebalanced right here again. So this is a new one. So if we would have been paying attention to the most recent intermediate term lower, intermediate term high, and prioritizing that one, then now we can anticipate, since this is the most recent valid intermediate term high, this is the intermediate term low. By the way, I took a loss, so we're gonna add it. 4, 6 trades, about 2 losses in a row, minus 1.75. Now at this point, I'm gonna take a sell position right here, anticipating that this intermediate term high will hold, okay? Created a new low right here. Created another new low right here. Oops. Okay, so what did we miss? Came up. No, it just didn't tap into anything, huh? It filled in this imbalance right here, so that's technically still an intermediate term high. So if we drug from right here, that intermediate term high to this low, set our entry right here, green line stop loss right here, see what happens. This filled in an imbalance that's an intermediate term high. Sorry about my dog. Here's a low right here. We drag it back up just to make it logical. Now I'm playing with it, y'all. I'm not really sticking to the rules at this point. I'm kind of playing with it. I'm trying to see what really works best with this. I've been working on this a lot. Give me your opinions down below, like what you're trying with this. Let me know what you think might hit, you know? Say that triggered us and we considered that like a liquidity run, continue down. Nope, instead it tagged us out. Hmm, very interesting. Let's go to the next day. Let's just count that as another loss. Screw it. At this point, we'll just say that that's 3. Now, this does not mean that this strategy sucks. And if it does to you, then that's totally okay. I think the strategy is still super fire. It just needs some critique, some critiquing. It just needs a little bit of love, a little bit of rules, a little bit of invalidations. And I'm telling you, this will be so good. This is something that will pass a funded challenge. I messed up. Let me just drag it back a couple of days. I'm sorry. I know we kind of know where it's going, but let's just go right back here. Why ain't it letting me go? All right, I'm gonna go to the 1 minute. Take a drink of my smoothie. All right, let's see. All right, so 2022 model ran out of liquidity. Hasn't market structure shifted yet. This is a market structure shift point. You notice it's tapping into imbalance and it's just rebalanced. That's the market structure shift. The low 5.6. It tapped into the imbalance, but it didn't rebalance it. Tapped into the imbalance. It just rebalanced it. So at this point, if it takes out this high, I'll consider that the intermediate term low. Nope. Instead, it went lower. This is the most current imbalance. Just got rebalanced, taken out right there. So this is the most current intermediate term low. Creates a high here. I am going to look for an entry now. Oh, buy off of this. All right, we're in the trade. Take profit one was hit. We'll claim partials, which is 0.25. So we'll see 3 wins. Total trades taken. That's 8 now. Take profit one got hit 3 times. So we're down 2.25%. Okay, let's see what else gets hit now. So if we would have had our stop loss right here, would have got taken out. That'd been a minus 0.25% loss. If we would have left it in, just take profit would have got hit. So we'll say that they all got hit again. 2, 2, 1, and 1 time. So if we would have held here, 0.5%, 6, that'd been a 3% win if we would have held. Okay. Let's just say we would have held for that and we won, right? 3% would have been up. Let's do this. So negative 2.25 plus 3. So we'd be up 0.75 plus 0.75. Okay. We would have held for that. Okay. Let's go to the next day. I don't went too far. Let's see. No, we didn't. Okay, cool. Drop to 1. Okay, 8:30. Ran out liquidity. Expansion. Tapped into fair value gap. Rebalance and imbalance. Let's consider this the intermediate term low. If it creates a high, there it is. We'll go from here to here. And we'll enter right here. Boom. Boom. The profit one will be here. We'll see if we get triggered in. We're in and we got stopped out. Okay. So that's another loss. And that's totally fine by me. 6 losses so far. Total trades taken are 9. Zero 0.25%. Okay. So let's just see what happened. Here's a fair value gap right here. So if this was an intermediate term low, or we could say that this one was, at the same time, it doesn't rebalance much. There's a rebalance of an imbalance. So if this is the intermediate term low that rebalanced the imbalance, it didn't hold, but very, very, very interesting, you know what I mean? It's rebalancing an imbalance. But it doesn't hold every time, you know, that should be an intermediate term low because it rebalanced this imbalance here. Also rebalance this imbalance here with this wick. That should be an intermediate term low to high. Got taken out. At that point, maybe we can add this to here, and then we can enter once it takes out that liquidity. Stops would go there, take profit one. Let's see if it takes out that high. No, it doesn't. Very interesting, very interesting. I'm still trying to understand how to follow it, what works best for this. As you can see, it's still very flawed, but at the end of the day, we're not down on the account a lot at all. Taking 9 trades and we're only down 0.25%. Now, granted, I did take that 3% on the, huge TP5. Who knows what gets hit the most. But I think this is good for now. We're going to resume this in another video. I think this has been long enough for a part one. Again, if you've liked the video, please drop a like, comment, let me know your concerns, give me some criticism, let me know what you would change, what you think would be better. And if you got unsubscribed, hopefully we've earned your subscription. But until next time, thank you for watching. Hotshot is out.